Hello, this is Todd Hubbs, agricultural economist at the University of Illinois. Today I'm talking about my weekly outlook from April 15, 2019, corn fundamentals showing weakness. We've had a few bearish reports from the USDA over the last few weeks. It began with the March 1st grain stocks and prospective plantings report and continued with the April WASDE, where we saw USDA raise ending stocks this marketing year by 200 million bushels. In the second quarter of the marketing year, we've seen lower use across all categories, including exports, ethanol grind, and feed and residual use. And this weakness in demand is really impacting corn prices. And from what I'm seeing, it may continue throughout the second half of the marketing year. So today I'm going to talk a little bit about three of the major use categories and maybe what we can expect from supply as we move into the 1920 marketing year. Corn exports have slowed considerably in the second quarter of the marketing year. Up through February, we were averaging about 40 million bushels a week shipped, and since then we've been averaging about 36 million bushels a week in export inspections. We've seen it tick up a little bit in the last couple of weeks, but even with that tick up, we're well below the pace. And as you can see in this graph, we had a huge gap forming between last year's export inspections, and now we're converging back. And I wouldn't be surprised if we crossed over by the end of the marketing year. Now there's a few things going on here. And the big one is some of the large exporters have had big crops and they have lower prices in the world market. We're facing some stiff competition this year. Right now, Argentina and Brazil are projected to have 1.9 and 3.8 billion bushel corn crops respectively. That's about 1.2 billion bushels higher than last year. And as a result, their exports for this marketing year are up 604 million bushels over last year. When you combine that with the large corn crop in Ukraine and basically lower free on-board prices at many of the export points for both Argentina, Brazil, and Ukraine relative to the U.S., it wouldn't be surprising at all to see exports continue to be somewhat weaker than what we saw last year through the summer months. Feed and residual use took a hit in the April WASDE. They lowered it 75 million bushels to 5.3 billion bushels, and it might go down more before it's all said and done. The large March 1st grain stocks report, which I talked about a couple of weeks ago, was particularly bullish for corn. And while we're at 5.3 billion bushels, it's pretty obvious that the 2018 crop was underestimated. We've got a pretty good livestock herd out there, and unless they're just eating nothing but meal, which is highly doubtful, we should probably see the feed and residual come down a little bit more before it's all said and done. As you're seeing in this graph, the second quarter feed and residual use was significantly below the last four marketing years, and this might play out as we move through quarter three and quarter four. So don't be surprised if feed and residual weakens even more, as that 2018 crop was slightly bigger than we thought. Another category where we've seen use tail off considerably this marketing year is corn used for ethanol production. We've seen ethanol production drop below 1 million barrels a day for a couple weeks here in a row. We saw it last week tick back up. Having said that, while the margins have increased a little bit for ethanol plants, they're still a little bit in the red, and ethanol prices are about 14 cents lower than they are at the same time last year. As you can see in this graph, the second quarter ethanol grind for corn was substantially lower than last year. And while I think we could see it pick up some in the third and fourth quarters of the marketing year as gas demand and exports continue to show strength throughout the remainder of the marketing year, that 5.5 billion bushels that USDA is currently projecting is probably pretty close to where we're going to hit. It could come in a little bit higher, 10 to 20 million bushels, but that's going to require an uptick in gas demand and continued strength in the export market. So overall, the fundamentals in corn have weakened considerably. And I'd like to see those pick up as we move through the rest of the marketing year. But fundamentally, this weakness is probably going to persist for a while. So if we're going to need to see a rally in corn prices, it may come from the supply side. We saw that corn acreage increased 3.66 million acres over last year in the March prospective plantings report. Now we saw soybean acreage come back considerably, down 4.6 million acres from last year. And right now, when you look at the harvest price relationship to corn and soybeans, there's no strong signal to plant corn. So this cold and wet weather conditions we're seeing all across the Corn Belt, and what looks like a forecast for this rain and wet conditions to continue into early May, I wouldn't be surprised if we saw some acreage shift before it's all said and done out of corn and into beans. But if that acreage shift doesn't materialize, you had a 174.6 bushel an acre yield in 2019. We're still looking at having corn production about 335 million bushels higher than this year's use is currently projected. I expect to see some higher use in 2019-20, but having said that, with the large production overseas, if we put in the kind of acreage we're seeing, we're looking at basically flat to range-bound corn prices over the near term and into 1920. It looks like we're going to need some kind of positive news either in the planting window and it's shifting away from corn, or a production shortfall somewhere to get corn prices to rally. Well, I'd like to thank you for your time. You can find my weekly outlook and daily analysis of issues related to Corn Belt farm economics at farm.daily.illinois.edu. I look forward to seeing you around the state of Illinois.